Today we're going to be talking about R&D tax credits. Hi, welcome to another UMI Makes It Easy webinar. Today we're joined by Roger Daines, who is the Head of Region for Scotland for Amplifi Solutions. Welcome, Roger. Thanks for joining us today.
Thank you for having me.
Yeah, really appreciate your time. So today we're going to be talking about R&D tax credits. So really looking forward to hearing a little bit more about what you've got to say on what is it that we can do with R&D tax credits, who's who can get them, what circumstances and all that sort of thing. So if I can pass over to you and just let you head off with your presentation.
Thank you very much, and thanks again for the invitation to speak today. So yeah, R&D tax credits, I'll give it a bit of a whistle-stop tour of what they are and the myriad of changes that are happening to this very well-established scheme at the moment. And I think first and foremost that they should be something that are very much applicable to a great deal of UMI customers, UMI SME growth businesses that might be developing new products or processes. So in terms of the agenda that I'd like to kind of go through today, an introduction to the scheme itself, what are R&D tax credits, R&D financials. What I mean by that really are it being a tax relief, essentially. It's like, well, how does that actually work? What does it mean? How much relief do I get? I think probably to a lot of your viewers today, the qualification criteria is probably going to be front and center. They'll be wanting to know, do I qualify? Is what I'm doing, is what my team is doing in this business, is this problem we're trying to solve as a company going to make us eligible for this tax relief? And that's something I can touch upon. Also, as I said, there are a lot of changes happening in this scheme. It's 20 years old now. It's over 20 years old. And over the last 2 years in particular, a huge amount of legislative change has occurred, is occurring, but also behavioural change by HMRC, the body that essentially administers the scheme. Next steps, what I mean by that would be actions, actionable insights really that your viewers can take from this, and some things to adopt into their processes, and maybe some action that they can take in order to best prepare themselves for making their first claim within this particular scheme. So what are they? First and foremost, well, as I said, since 2001 or 2000 even, the UK government brought in this corporation tax incentive that's applicable to UK limited companies. And it's I think in the simplest possible terms, it's a reward for businesses that invest in innovation. And we'll come to this sort of examples of what innovation is within the UK and the particularly large sectors or industries that are claiming it. But the backdrop to this ultimately is that the UK wants to be a competitive economy, a competitive marketplace that attracts talent, that attracts companies from overseas, or inspires businesses or individuals to remain in the UK and build their career here. And it's ultimately a way of the government saying, well, we will help de-risk this process of you developing a new idea, invention that may succeed. Ultimately, we hope it succeeds, or it may ultimately fail, but we will help you along the way by reducing your tax burden, or even if you're not making any profit, you can access that in cash, which I'll get to in just a second. But if you look on the left-hand side of the screen there, R&D tax relief has grown into a huge flagship award really from the government to SMEs and large companies, right up to your Pfizer's, your BPs, and so on and so forth, to the extent that, that at the last count, over 7 billion in tax relief was awarded to over 50,000 individual businesses within one accounting period. So how does it benefit individual businesses? Well, as I've stated, it's a corporation tax incentive, eligible expenditure that's been incurred on inventions, new products, new processes, new ways of doing things. That applicable expenditure is enhanced against your profit and loss over any given accounting period, and it effectively helps you to mitigate whatever your tax burden might be over any given accounting period. Now, there's two ways essentially that you can avail the benefit, and that's if you're a profit-making business, where you can actually reduce substantially how much tax you actually pay, and that enables that business to retain that money that it would have otherwise gone back to the Treasury. What they do with that money, it's entirely up to them. It may be reinvested into new products or growth, whatever they wish to do with that. Loss-making companies can convert the R&D relief into cash, or indeed carry that forward to offset against future profits. But we work with a lot of very early stage businesses. Some of them have literally just spun out from university with some incredible new product there. They are heavy loss making in the early years. Some of them maybe even be pre-revenue, but that does not preclude them from claiming R&D tax relief. So it's a huge critical element of cash flow, a way of them extending their operating runway for 6 months, 12 months, or possibly even longer. So there's distinct benefits to these businesses. It ultimately helps them accelerate their innovation plans and growth strategy. And as I've said, it's that cash that they realise, whether it be by reduction in tax or access via a loss surrender, it's entirely up to them how they wish to deploy that working capital. So the source of project costs, before we get to the qualifying activity, which I'm sure all the viewers will be desperate to know what they're doing apply, but ultimately expense has to go through the business. Costs have to go through a particular business over any given accounting period in order for tax relief to be able to be claimed against those costs. Now, there's 5 principal costs that we would look at, that we would explore. The biggest of which is always going to be people. That would be their salaries, for example. What did you pay your designers, your project managers, your software engineers, your developers, whoever it might be? What were their salaries? You can also throw in their employer pension contributions and employer national insurance contributions, but that is the biggest single cost that any business will incur when developing a new product or process. To de-risk that process, certainly in the early stages of growth of their journey, they might subcontract that development cost out to a third-party intermediary in the UK or overseas. But that is typically equal to, or if not slightly less than the people cost, but it's ultimately still individuals, human beings that you're hiring to enact the innovation or bring that to life ultimately. Other main pillars of cost would be utilities, so that could be the heating and lighting of a laboratory, for example, a portion to the amount of R&D eligible time that's undertaken over any given year. Consumables, that would be materials used and destroyed in the prototyping of a particular product. And software licenses as well, such as computer-aided design, is very heavily used in engineering and manufacturing, but there's a myriad of software licenses out there now that businesses might need to pay for in order for the innovation, the design and development of the particular product that they're building. So those are the 5 main qualifying costs. And in terms of the amount of tax relief that you can apply for, this is where it gets slightly complicated, because we're effectively moving from an old regime transitioning through to a new regime, and that all started to happen from the 1st of April last year, the 1st of April 2023. Effectively, I mentioned on the left-hand side there the enhanced reduction rate. So what you can do is you can increase your eligible costs on R&D by up 130%. Now that's applicable for any expenditure prior to the 1st of April 23. The UK government did a review of the scheme and felt, well, they were looking to drive as much value from the scheme as they possibly could. So they've effectively reduced the generosity of that rate of enhancement from 130% down to 86%. And in terms of the cash credit rate, I mentioned that businesses can take or surrender the relief and access it in cash. That cash credit rate has effectively gone down to 14.5 to 10%. It's a bit of a double hit there. Anyone participating in the scheme, industry leaders, businesses, specialist firms like ourselves, weren't particularly pleased at this, but there has been some dilution of these proposals, which I'll get to in just a second. There is a large company scheme as well, research and development expenditure credit, which is applicable for companies with, say, more than 500 employees or 100 million turnover. There's actually an increase in generosity of that particular scheme, but from 13% or 20% above the line credit. In other words, that benefit is taxed. So there is some good news to be coming out from these changes. This being one of them in actual fact. So for any business that's a loss-making company or is making a loss surrender claim, they could, as long as they are currently spending more than 40% of their overall expenditure on R&D activity, they can actually get an enhanced rate of relief, which effectively means it's 27p or £27 for every 100 spent. So there was some concession there by the government last year. So the R&D tax credit rates from 1st of April 24 are in fact going to be merged into one single scheme applicable to small companies and large companies alike. And that's just going to be a 20% expenditure credit, which is taxable. And that is scheduled to come into play for accounting periods that commence from the 1st of April 2024 as it stands. That may actually change. It may be pushed back a year. We're waiting to hear about that. There's going to be a budget on the 6th of March, and I'm sure we're going to hear a little bit more about their plans for R&D tax relief going forward. And actually, another little bit of good news there: the 40% expenditure on R&D to claim the higher rate, an enhanced rate of relief, has actually been reduced to 30% threshold, which is good news for loss-making SMEs. It means that the barriers to entry have actually been reduced to access that enhanced rate. So that's a little bit. We just covered there the rates. Quite a lot of numbers there. Quite a lot of jargon potentially for you. This ultimately is just an introduction, and you can take follow-on calls or questions after this. I'm more than happy to help with that. We'll move on to the types of qualifying sectors that we're typically seeing. The big four, if you like, are technology, life sciences, engineering, and manufacturing, with just a few examples within which that you can see there. So technology, huge amount of digital transformation that we've seen, sector agnostic transformation via the use of digitalization, certainly since the pandemic, platform integrations, app developments, smart device connections. AI obviously is an enormous development now in the world of technology. Life sciences, I think we've all seen firsthand in the top sort of life science, new drug treatments, vaccines, and so on being developed at great expense and at great commercial risk by these businesses. And obviously engineering and manufacturing, two huge powerhouses of sectors. So these probably account for 5 to 6 billion in claimable relief each year by businesses within the UK. So in terms of what these businesses are actually doing, we as a business, Amplifi Solutions, have a particular approach to R&D tax relief claims. And I mentioned the HMRC behavioural change over the last couple of years. They are particularly focused on the strength of the innovation that businesses are making R&D tax relief claims for. In other words, they are rejecting a lot more claims on the way in because they simply don't think that every single claiming business out there is doing something that's completely unique or completely bespoke. That's meant that the tests and the information that is being submitted on the way in at the point at which you're making the claim needs to be particularly strong. It needs to be articulated in such a way that HMRC will recognise and understand. It needs to be very granular. And I guess the process we will follow with any of our businesses that we currently interact with, or any new businesses that we meet, is we ask them first and foremost, what is it you're attempting to do? What problem are you attempting to solve? And get them to talk to us about that. And I suppose of great importance to that end is what existed, what technology did exist or not at outset that you felt the need to set out and invest hundreds of thousands, sometimes millions, or even tens of millions in a product to improve at sector level the capabilities of science or technology. There needs to be a distinct and demonstrable advance in, as I say there, in science, technology, or system capability. And this process here is very much kind of like an interview process where we would speak to the heads of technology or the leading individual within that business responsible for project rollout, and extract these key elements of innovation. There has to also be uncertainty. There has to be known hurdles at outset that business or that individual knows it has to overcome. And then those need to be known at outset. There may be further uncertainties that are encountered along the way, but it's ultimately how did they overcome that uncertainty, and what did they ultimately do to realise their new invention, all of which needs to be carried out by deemed competent professionals, individuals with long-standing experience within a particular sector, qualifications, and so on and so forth. So sorts of qualifying R&D activity, which to the point around competent professionals, prototyping, trialing, testing, analysing, gaining third-party assistance. I mentioned the subcontracting out. That's a de-risking process in itself. Quite often we see software development outsourced to Eastern Europe, for example, or anywhere in the world where there's a particular expertise and sometimes a commercial reason to use overseas subcontracted work as well. Codification of new scientific knowledge. So all of those bullets there on the left would what be deemed as qualifying activity. Then you would look at what percentage of that person's time was spent on those activities, and then we'd look at what they were paid in salary over any given accounting period, and that's how we begin to shape an R&D tax relief claim. Non-qualifying activities, conversely, despite the fact that there's a few buzzwords in there, market research, background research, those wouldn't typically or at all qualify for an R&D tax claim. There are some other changes, not just around rates, but to applicable activity and pre-notification, for example, that are coming in. So like I say, we're going through a little bit of a transitional phase where we had an old world, we've now got the world that we're currently in, and there's going to be a new world that happens or commences from 1st of April 2024 onwards, but there's going to be a pre-notification of claims. So as it stands, for example, you can claim R&D tax relief every year once your accounting period has ended and you've surpassed that. But you can also look back 2 closed accounting periods. That's going to end. So you will only have 6 months after the end of an accounting period to notify the HMRC that you're going to be making a claim. There is an R&D intensive rate, as I mentioned, for loss-making small companies, which is good news. Data and cloud computing costs can now be included in a claim, so that's a broadening of eligible costs, which is another good news piece there. It effectively means that the expenditure on a claim goes up, and the claimable benefit commensurately goes up. One or two administrative changes that occurred just last year. There was an additional information form requirement that came in from August 2023, where HMRC were asking for some very specific bits of information to support any claim. That's something that, caused a few claims to come unstuck. People just simply weren't aware that these additional hurdles needed to be overcome, but that's something that came in last year. This is all about ultimately tackling abuse for such a popular schemes in excess of 7 billion per annum. There are going to be claims that are stretching the boundaries of reality. Some claims bordering on, well, actually weren't bordering, there were actual criminal claims, and arrests have occurred. So HMRC are taking steps to tackle that abuse, and unfortunately, the vast majority, you could argue, of claimants have been impacted negatively by this, but it's just a period of time that we're working through, and hopefully the worst is behind us in that regard. Some changes that are coming down the line. So for loss-making SMEs, I mentioned there's a merge scheme happening. So the notional tax rate is good news. This will be lowered from 25 to 19% because it is an above the line credit. Contracted R&D. So this is really just about the relationship between two businesses, one of whom might be contracting another one to do the R&D. That's been a particularly hot topic over recent years. The HMRC just need to be completely clear that there aren't two companies claiming for the same work undertaken. So there's some changes around contracted R&D coming through the pipeline there. This is a good news story here. Subsidised expenditures, in other words, grants, will not reduce the eligible expenditure on any given claim, which just means that the full amount, whether it's own money, private equity money, bootstrap cash, in addition to the grant support, can all be thrown into a claim, and it's not going to dilute the claimable rate in any way, the way it does under current rules. And as mentioned, we're effectively simplifying the R&D landscape by merging the two schemes together into one simple scheme for all. One or two additional changes I mentioned, the overseas subcontracted work. So the UK government, again, I think they're aware that a lot of third-party work is being undertaken by businesses overseas. As it stands, you can claim for that work if you subcontract that out to another country. But from the first, for accounting periods that start from the 1st of April 2024 onwards, any subcontracted work needs to be undertaken by businesses with a UK presence, a UK limited company itself. There are ways around that, obviously. You can, bring on full-time, hire the overseas businesses or individuals into UK limited company, but that is going to impact a number of businesses, certainly that we know, and it will mean they have to make a decision about how and where they undertake the innovation itself. And I mentioned the change in qualifying expenditure from 30%, from 40% down to 30%. That means that businesses can access that enhanced rate of tax relief that little bit easier. So some of the businesses that we work with here, one of which is a cybersecurity company, very much in growth stage, heavily equity backed, millions in development spend on salaries, and their benefit in one particular accounting period on a loss surrender business was just under £260,000. That was hugely impactful cash for them to be able to pour it back into innovation probably create even more jobs. Here's a life science business for far smaller scale, developing a low carbon building materials as an alternative to cement. 30k benefit, but nonetheless still an essential form of capital for them. So the next steps that I mentioned, I think for your viewers, be very important for them just to do an assessment of what they do as a business. Are they trying to create something that's new or improved, that's particularly could be unique within its particular sector? It's achieving sector level advances. Are those advances undertaken by a competent professional that they had to hire in for that particular expertise, or indeed outsource to a subcontractor to access that level of competence? He oversees expenditure restrictions, obviously just to be cognizant if you are currently claiming R&D tax relief that these changes are coming down the line. And yeah, it's never too early to capture relevant data, capture and record that. It could be the nature of the projects themselves, the baseline technology, the advances, the overcoming of technical uncertainties that I mentioned earlier on. Just create a bit of a working document in terms of the project narrative, the technical advancements, and numbers as well. So that would be you can on your accounting platform in codifying individual costs, documenting the individuals working on those products and process developments. And it just means that as and when an R&D tax relief claim is made, that you've got as much information as you possibly could have gathered, and nothing is lost. And it'd be remiss of me to not to mention that the discharging of this particular function, the R&D tax claim itself, it's very important that whoever is doing it for you, whether it be your accountant or a tax consultancy, a specialist firm like ours that really does know what they're doing, do they have that in-house technical knowledge to be able to understand what you're doing as a business? Is the information being captured and recorded properly and accurately? And why would you use a company like Amplifi Solutions? Well, our process is very much where we would be delighted to meet any business that thinks it may qualify, given or based upon what the activity that it's doing in developing a new product or process. That's an obligation-free meeting. At that point, should there be sufficient levels of R&D, strength of R&D, and expenditure in order to proceed towards making a claim, then we would contractually engage. We have a team of 30 plus individuals, mixture qualified accountants, tax advisors, data analysts, but also multidisciplinary engineers with long-standing experience in a number of sectors, not least the four main ones that I highlighted earlier on. The way that we build our reports are extremely comprehensive. They're designed to be prudent. They're ultimately designed to be accurate. HMRC are, as I mentioned, are scrutinising claims at a far increased rate compared to 2 years ago. So I think the strength and quality of the technical narrative and the numbers, it really does need to be at premium level now. We will work with our clients over many years. We want to grow with them. So if they're a first-time claimant, especially if they're a first-time claimant, following that first claim, we will help them adopt best practice into their project and data capturing processes to ensure that future claims are as high as possible based on granular bottom-up capture of data, but also defensible against any HMRC scrutiny and interaction, which we would step back in and support any of our clients with. So that's been, I hope something that you can take away with you, an introduction to R&D tax relief for those of you that are currently claiming, maybe an insight to some of the changes that are coming our way over the next few months. The ways how claims can be enhanced, increased in quality, and ultimately help you accelerate your product and process development plans. My contact details are on the screen there. More than happy to field any emails or calls. But thank you very much for the invitation onto your webinar today.
Thanks so much, Roger. That was really brilliant. And I think we've got a couple of questions just as a follow-up on those things. You mentioned there about sector-wide innovation. So does that mean that a company can't just make a claim for an innovation that is for their business? It has to actually be sector-wide. Could you explain a bit more about that?
Yeah, that's a good question, actually. I think this is largely driven, I would say, by HMRC pushback on a number of claims. We're seeing certainly a trend in software, the software sector specifically, where HMRC have objected to what that claimant is doing because they think it essentially brings them up to commercial. It makes them more commercially successful, but it does not represent a distinct advance in capabilities sector-wide. Trying to think of some examples. If you compare, for example, the automotive sector to the timber sector, the automotive sector, you could argue, is far more advanced in software terms. So what might qualify as an advance in one particular sector might not qualify in another, but at the same time, HMRC are just particularly aware at the moment of not paying out claims or approving claims where this is just somebody who's or a business that is not developing something that is particularly unique or in any way unique. So yeah, that's something we're seeing more of a trend of. Yeah.
And you mentioned that there was a lot more people getting caught up in that beginning process of the system now. Is there anything you're seeing in terms of trends for what's getting those rejected? You mentioned there about maybe it wasn't unique enough. Is there anything else that you could share on that?
Well, you know, as a business, I mean, I think we're aware that the HMRC claim inquiry rate is about 10% at the moment. We're slightly below that rate as a business, but we're seeing first-time claimants at a claim benefit level of about 20K or lower. Software is, I think, probably the biggest sector in terms of volume of claims, individual claims, certainly one of the big four. That's one distinct trend we're seeing. But you know, that doesn't limit the inquiries to that. I think ultimately the HMRC are looking at the R&D strength of any claim, irrespective of the sector, and then in their own way, in their own capacity, comparing that to what they might be able to go out and find on the internet and reject it on that basis. But I would tend to agree with their approach that if a business is investing in some system that's bringing it up to, that's making it it's more competitive against, you know, within that particular market, but not achieving a sector level advance in capability, I would tend to agree with their approach to that.
Right. So it's about if you are getting a commercial benefit that's only a benefit to your business, then they're not going to pay out. Okay. Interesting. So then in terms of pitfalls throughout the process as a whole, is there anything, learning points that other companies can take away in terms of how they record and get ready for an R&D tax application?
Yeah, well, I think, you know, that's really just about early engagement into the process. You know, I mentioned that I have a number of clients, prospective businesses that are spinning out university. They're very, very young. Excuse me, very young businesses indeed. Now, they may not be claiming for R&D tax relief for another 12, 18, even 24 months hence, depending upon when they're going to be getting money into the business, but they're definitely developing something that, in an art perspective of R&D strength, is really very strong. So at that point, it's, they'll thank their futures, or their future selves will thank them for, at that point, capturing project narrative, capturing cost as they go along. Because with the best will in the world, to look back when you're a busy founder, trying to remember who did what, is it's very difficult to capture that. So I think it ensures that claim values are maximized. I use that word hesitantly, because maximized really is, it's just about finding everything that's applicable. And if you do that, you're going to maximize what you can potentially claim. But it also makes it very accurate. Accuracy is key here. I think the narrative now in the R&D market is very much around, I just want to know my claim is the right number. I don't want to know that I've underclaimed. I don't think anybody would want to be in that position, but I certainly don't want to be in a position where I've overclaimed, because that's when you get, serious implications. Should HMRC investigate your claim, then you're involved in a 9 to 12 month protracted back and forth process. So I think the pitfalls to avoid would be generalizations in terms of expenditure, not submitting a very, very strong bottom-up, robust technical narrative along with the data to support the claim itself. That's where you're going to come unstuck, and that's where we still see businesses coming unstuck that are approaching us for help and getting them out of that mess.
Yeah. And that's really useful. And when you mentioned there about, you said in your presentation about accounting tools that can help you so you can codify things. Is there any specific
Absolutely.
tools that you would recommend that people use to track their costs and track, sort of proportion of time that staff are spending and that sort of thing?
Yeah. Well, the main accounting platforms like Xero, QuickBooks, and so on can cater for that, for sure. It's just it's getting their accountant or their finance team into the habit of coding costs very granularly and very regularly. But we have additional templates that can support that input process, to just ensure that they're aware of every single individual within the business that could be working on a particular innovation. But ultimately, I think as long as they've got a fairly slick accounting platform, that should take care of itself. We as a business will come in and ensure that any relevant data is extracted, and ultimately any of the claim build process is done by us. So we're taking that, I suppose, that task away from not only the company but their accountants. But I think it's always good to have a good accounting platform, a good record keeping and data capturing, regardless of the stage of your business.
Okay, so Roger, I've got one final question for you, which is, you mentioned around, you work with a lot of companies from universities, for example, with spin-outs and might be doing R&D over quite a while. Is there a limit to how far back you can go with this?
Yes, under the current scheme rules, you can go back and claim for your past 2 closed accounting periods. So that's quite good for any business that might have been unwittingly developing something but didn't actually make an R&D tax claim at just shortly after each of their accounting periods elapsed. HMRC aren't particularly comfortable with that process, so they're going to actually remove that from under the new regime. That is, should that come into play, whereby any business must notify HMRC within 6 months of the end of its accounting period that it's actually going to make a claim. So there's no pre-notification under current rules, but those are coming in. So I think the best thing there really is for for any of your businesses, you should think about what they might have done over the last couple of years, and there is still time to look back as it stands.
Perfect, thank you. Okay, so that's everything. Thank you so much for your time, Roger. Really grateful for that.
My pleasure. Thanks for the invitation.
So that was brilliant. Thank you so much, Roger, for that. We really appreciate your time. And if you want to get in touch with Roger, then he's happy to take any questions, and you can get in touch from anywhere in the UK. It doesn't have to be Scotland, and it's Amplifi Solutions.